G'day guys, it's Simon and Crystal from Pumped On Property and welcome to 2024. What an exciting year we've got ahead of ourselves. If you haven't already done so, we recorded a video where we talk about our 2024 property market predictions a few weeks ago. But in today's video, we're really going to look at the month of December. In these monthly market updates, we'll sort of break down the growth rates, the changes to the vacancy rates, the changes to the rental conditions so that you guys can go out there and make some better decisions. Well, let's not beat around the bush and we'll get straight into it. I've got some notes here from CoreLogic looking at the total return on investment for the capital cities over 2023, but also in December. So Sydney in the month of December went up 0.2%. However, over the year of 2023, it went up by 11.1%. The third or fourth top performing market in Australia. Now, Melbourne declined by 0.3% in the month of December. It only went up about 3.5% in 2023. So it was the lowest performing market out of the areas that we're looking into. Now, Brisbane has gone up by another 1% in December, so still recording some great returns. And Brisbane was the second top performing market in Australia in 2023, going up by 13.1%. So great returns there. Adelaide over December went up 1.3%. So still moving forward, really strong, up 8.8% for the year of 2023. So well done to anyone that invested down there. And Perth still leading the charge since about July of last year, going up by 1.5% in December and 15.2% in 2023. So Perth is looking really strong. Now, this isn't out of the ordinary. Generally, at this stage of the cycle, we do see Brisbane, Perth and Adelaide end up being the top performers, but Sydney having some strong conditions there as well. CoreLogic also looked at the return on investment for these capital cities since the onset of COVID. So that's like April 2020 through to December of 2023. Now, Sydney was up 24.6% over the last 3 years. So it's absolutely boomed, 3.5 years actually. Melbourne up just 11%, so it has not performed anywhere near as well as these other capital cities. Then Brisbane up just over 50% at 50.2% since the onset of COVID. Adelaide being the top performer since then, going up 52.3%, and Perth right there as well at 47.2%. So coming out of CoreLogic, things have been looking really strong. And if you go back and listen to our 2024 property market predictions video, Brisbane, Perth and Adelaide are expected to be the top performers moving forward as well. So looking really good, but what about SQM, Chris? What are some of the information coming out of them?
Yeah, awesome. I have a little bit here on my laptop, so forgive me, but I'll just read sort of directly off there in terms of what happened in December, sort of across the Australian property market and what SQM are saying coming into the new year. So for the start of 2024, SQM are taking a little look back across December, and the number of national residential property listings decreased by 5.2%, dropping to 234,194 dwellings listed from 247,000 recorded in November. So nationally, new listings, so less than 30 days old, experienced a 3.2% drop in December, and distressed listings actually decreased by 6.2% in December as well. National combined dwelling asking prices dropped by 0.2% in December, maintaining a value of $806,612.
Pretty damn expensive for a house in Australia these days.
Nationally, the vacancy rates are also still really, really low, sitting about 1.1% as they were towards the end of last year. SQM haven't released where those vacancy rates are as of January 2024, but based off the end of December last year, they were still really low at 1.1%. And with vacancy rates extremely low, distressed listings are down across all capital cities according to SQM. Asking prices are on the rise, national listing numbers are down at historical lows. So all of this data points to some of that price growth they're predicting in 2024, and obviously the price growth that we saw according to CoreLogic through 2023 as well.
Yeah, because at the end of the day, you know, capital growth comes off the back of supply and demand. And based on all of that, like, supply is really low and really tight, but demand is still extremely strong because we had a massive population growth year last year. And, you know, this year, yeah, that'll slow a bit, but it'll still be quite high. And that goes into some of the things that CBA were talking about as well. Like, you know, they're also mentioning rents are continuing to rise. Vacancy rates are still extremely low. For sale listings remain low in Brisbane, Perth, and Adelaide. Sydney and Melbourne and Canberra and Hobart have picked up a little bit, but those areas where the capital growth is the strongest, it's still been really, really tight. It'll be interesting to see what happens as the year unfolds. We had a big meeting with the team this morning, and if you know where to look and how to look, there is still plenty of supply out there. It's just lower than what we'd expect in the past. So you just got to change the way that you approach finding the right type of property. Now, what's expected this year, because inflation is trending downwards in most sectors now, like even fuel, electricity is starting to trend downwards as well. Obviously, December and January, you see retail spending and travel go up a little bit. Naturally, everyone's on holiday, but that's just a seasonal thing. It's likely to sort of continue to trend downwards. And that's why they expect the interest rate cuts to begin in September of this year. That's what CBA is saying. I do believe the same expectations from ANZ, NAB, Westpac maybe a little bit later this year. So, there is a light at the end of the tunnel when it comes to those interest rates. They are expected to come down. That will likely stimulate the property market even more so than where things are at right now. So it's looking like everything's shaping up to be a really interesting year. Now, some of the information that we didn't have when we did that 2024 property market predictions video was some information from Simon Priestley from Propertyology. He is a very bullish investor, where most of the other analysts and economists are quite bearish. So it's good to get all the different perspectives and opinions. And he was quite accurate last year, being quite bullish. But what's he sort of said? I know you've got a heap of information there, and he talked about a whole bunch of different stuff. So go for it.
Sure do. I've got a bunch of notes here that I think are worth talking about. He's sort of done a little bit of a 2023 market wrap, as well as his rough 2024 predictions. And a lot of that plays at the hand of what CBA is saying. Obviously, inflation getting under control, overseas migrations remaining strong, interest rates coming down. All of these are going to be contributing factors to this sort of perfect storm in the property world. So essentially, throughout 2023, the median house value nationally increased by 9.9%. He's saying that conditions won't be perfect in 2024, but the outcome should be positive overall. I guess leading into that are some of the knowns, what we know is going to happen in 2024 that should help impact the property market in a positive way. These are things like housing being an essential commodity. Everyone needs a roof over their head, and people will do anything they can to keep that roof over their head, whether it's a rental property or buying. The resale supply is 32% less than the same time 5 years ago, and we have 1.7 million more people in Australia right now.
Wow.
So the lack of supply is feeding massively into this concoction of per capita growth that's predicted to come, because supply is insanely low and population growth has been continuing to grow over that 5 years. And in line with that resale supply, we've got the rental supply being extremely low. So the population compared to 7 years ago is 2.5 million people greater, and there are only 30,000 properties on the market nationally for rent. 7 years ago, there were 78,000 properties on the market for rent, and that 2.5 million fewer people. So as you can see, unless there's several years of high levels of investor activity, rental supply will remain tight. And unfortunately, like it or not, that's just the reality of the market we're dealing with right now.
Yeah, when you hear about those numbers, it's just no wonder rents are going up, no wonder property prices are going up.
Exactly right. So in addition to that, the new built supply is extremely low. We've got challenges in construction costs, inefficient building regulations, tight labour supply, and high property taxes. So there's not enough new homes being built. The internal migration has been fantastic for the 21st consecutive year. More people have migrated away from capital cities to regional locations, which are stimulating those economies outside of the major capital cities. The overseas migration was 518,000 people in 2023, and it's predicted to be somewhere around 350 to 400,000 people in this coming year. So in addition to the knowns that I've just spoken about, Simon Priestley from Propertyology has sort of given this thing that he's calling the joker in the pack. So this is something that's going to impact the property market in kind of an unprecedented way mid-2024, and that's the impending reduce of income taxes. So abolishing the 37% tax rate will be one of a few income tax improvements from July 2024. And that's going to mean that millions of Australians will enjoy an extra $10,000 net annual income or more. So to put that into perspective, there's an estimated 2.5 million people in the $80,000 to $100,000 tax bracket, 2 million people earning between $100,000 and $150,000, and 1.2 million people with a personal income of $150,000 or more. So that adds to approximately 5.7 million people whose borrowing power will instantly improve by mid-2024.
So basically, to put that into perspective, what the Australian government has proposed and what is likely to come into fruition from the 1st of July is a massive income tax cut. So people that are earning up to $200,000 will be on a 30% tax bracket. So, that obviously helps a lot of those higher income earners mostly that'll be saving a lot more money as opposed to paying that in tax to the government. Generally, when people have these extra savings, they're going to be spending it on something which will obviously influence the economy in a positive way, and we know that that will always trickle through to land prices increasing. So whenever we've seen these types of tax cuts in the past, you generally see property prices rise off the back of it.
Yeah, most definitely. It'll be exciting to see if that comes to fruition, and obviously a little bit more money in the back pocket of people. And hopefully for those people that are investors, it's going to offset that difference between the rent and the holding costs of property, so they can continue to hold properties with these tax cuts and things like that that maybe weren't looking as positive through the last financial year. In addition to some of the things Simon Priestley is saying, just going off what you said before about inflation, is predicted to continue along a similar path to the last 12 months and remain in sort of a declining pattern. But he's given a little bit of context around some of the performances or predictions around capital growth over the next 12 months in most of Australia's capital cities. So I'll jump into some of that data straight away. The best 15 to 20% growth is possible in numerous regional locations. So Simon Priestley anticipates that the highest rates of capital growth in this year will be in markets like Rockhampton in Queensland, Hahndorf in South Australia, Bunbury in WA, parts of central Queensland, Port Lincoln in South Australia, and Albany in Western Australia. So a lot of that is sort of that movement into regional markets that I spoke about before with that net migration internally. Perth is expected to be the strongest performing capital city according to Simon Priestley, with a price growth of between 13 and 18% through this year. Brisbane closely behind as the second strongest market, somewhere between 9 to 13% growth. Adelaide will be somewhere between 8 to 12% growth. Sydney is expecting to grow somewhere between 3 and 7% in 2024. So they're sort of the best performing markets in this coming year. He said that Darwin is predicted to grow by 3 to 6% in the coming year, which I know the market update we did at the end of last year, most people were having some pretty grim predictions for Darwin. So it's interesting to see someone's got some positive things to say about Darwin.
There's a huge shift with the Australian military at the moment, and that's going to add some significant value to Darwin and Townsville as well. Basically most of Australia's military will be based in Darwin and Townsville. So that's more population growth. These are high income earners. These are good, solid quality demographics. So that'll be a really positive thing. And then just some of those regional markets, very tied to the mining sector there as well, which we know, we're exporting a hell of a lot because right now there's an international infrastructure boom occurring, and, that requires concrete, metal, etc. So our iron ore is getting exported. Price of iron ore is going up. We're needing more workers to go and work out in these mines. So it's just a compound effect of, the commodities sector performing really well as to why some of those markets that are attached to the mining sector will end up performing a little bit better.
Yeah, awesome. No, it's great to just get that context around some of this data. Hobart, according to Simon Priestley, is predicted to grow between 2 and 4%. Melbourne is sitting somewhere between 0 to 3% growth. And we've got Canberra sitting at a 1 to 2% decline, unfortunately for Canberra. But Simon Priestley's got some positive things to say about the market in 2024. It's exciting to see what may or may not come of that. Definitely some things that are likely to happen that'll play in the hands of some positive growth in 2024 for a lot of these markets.
Yeah, I love it. Like nobody has a crystal ball, so nobody truly knows what's going to happen. So you really just got to do your own research and, look at your financial situation and determine whether or not it's the right time to do something. You can always go talk to your accountants, your mortgage brokers, your buyer's agents, your financial planners to really analyze your situation to figure out whether or not you are in a position to buy. And, if you are considering purchasing at some point early this year in 2024, we would love to offer you a strategy session. Me, Crystal, my brother, we run a buyer's agency here in Queensland where we help a real select few people enter into the Queensland property market. What we do for everybody that watches these videos though is we offer a free strategy session during which we can talk about where you're at right now, where you're looking to be in the future. We can talk about some of the things that may be holding you back from getting into the market and sort of create a bit of a bridge from where you are to where you want to be. If you'd like to do that, then follow the links below. Go to www.pumpedonproperty.com, follow the free strategy session links and book in a call with myself, Simon, or my brother Ben, or my sister Crystal, and we can have that discussion so we can start planning for 2024. Now, what we're noticing here in the Brisbane market at the moment as buyer's agents, because we're buying anywhere from sort of 2 to 4 properties every single week right now, it's a seller's market. On average, there's lots of demand and it's really competitive at the moment. But that is mostly in the more affordable sector of the market at the moment. So they're experiencing much more demand where property prices are below the median house price. Whereas as you start to get to the upper end of the market, they have weaker selling conditions, not as much competition. Now this is obviously because people's serviceability has taken about a 30% hit. So anybody that used to be able to afford a property at $900,000 is now down at about $650,000. So that's why the demand is going there. What we've noticed over the last 12 months is a gap between the higher end and the lower end of the market is now smaller. So depending on your goals, depending on your budget, there is a lot of value in going for that upper end of the market because the gap is so small at the moment, but, it's an artificial gap because of these higher interest rates. The other thing that we've sort of realised is, Townsville looks really attractive and the fundamentals appear to be very strong up there in terms of population growth, income growth, job growth, etc. is looking really strong. So the change in military and a lot of people moving up to Townsville because of that. You've got the mining sector picking up because you've got the railway that comes into the port of Townsville, which is where most of the materials come and go out of Australia. So that's increasing. You've also got the James Cook University up there. So you've got good education opportunities. You've got the hospital. You're on the Great Barrier Reef as well. So there's lots of tourism. So for folks that have got a slightly lower budget, maybe if you can only afford a $400,000 to $500,000 property and you can't afford to get into, say, Brisbane or Perth or Adelaide any longer, then, that market looks really strong. So we've actually opened it up and we're now starting to look there for some of our clients as well. If you want to learn more about that market and that's somewhere where you see value, then as I mentioned, feel free to book in one of those strategy sessions and we can get the conversation started and start bouncing some ideas off one another. But either way, based on all of the information that we've broken down today, the Australian property market looks really strong. The fundamentals appear to be really strong and it's expected to be a great year for most markets around Australia. We'll have to wait and see what actually unfolds. But thank you so much for listening, guys. If you haven't already done so, give this video a like and subscribe to our YouTube channel. All the best.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty.